All right, thank you so much for tuning in to Morning Markets. Tomorrow we get the Bank of Canada rate decision. They are expected to remain on hold for a third meeting in a row, but holding these rates at 5% and trying to assess, is this having the necessary impact on Canadians? We're seeing it in some ways show up in GDP. We're seeing it show up in unemployment. We're seeing it show up at the Canadian banks. And today we just got a read of housing data in Toronto, and certainly there is a slowdown there. To help discuss all of this, we've got Cormier, President and CEO of Desjardins Group, joining me. Thanks so much for being with me.
It's a real pleasure.
So, I mean, we obviously talk about the big banks out there because they're public. They report earnings. Desjardins being a co-op structure. Yep. You're still kind of in the thick of all of these cross currents. How would you describe your optimism level these days?
Well, honestly, I think we are still optimistic, but the next 6 to 7 months in front of us will be quite a challenge. Is there going to be a huge recession, a soft landing, a slowdown? Honestly, I think the jury is still deliberating. But at the end of the day, until next summer, it'll be quite rough for many households and many SMEs.
And your job is to look at the accounts of your clients, of those small and medium businesses, and ask, can they handle it? From what you're seeing, are they taking steps today to deal with, whatever mortgage renewal issues and loan issues that they might have in the future?
Well, the answer is yes. Actually, as an example, we called at Desjardins more than 70,000 of our members in the last 9 months that were on floating rates, and we worked with them to see if they could figure out something. Sometimes it was just working on the amortization, a lump sum payment, or just changing their monthly reimbursement, and it worked it out. 96% of them change, and now they're still having their house. They're still able to pay their mortgage. And that's the mindset we're in with all the renewals that we see in 2024, 2025. But at the end of the day, from our perspective, the unemployment rate is key. I don't look no more too much on inflation. I think the work is quite going very well. I look on unemployment rate. And if people keep their jobs and are able to continue to pay, maybe they'll change the way they budget their things and they expand in restaurants and travels. But it will do as much as they can to continue to pay their mortgage. So that's where we're still optimistic.
So then we wouldn't see kind of that first order effect, which is, I think the legacy of the financial crisis, people losing their homes in the United States, is still with us. So if we're not going to see that, because Canadians, if they have a job, will try to stay in their home, there are second and third order effects, right? It means that they'll have less available incomes to spend on other things.
Absolutely.
And that's where the slowdown comes.
Well, that's where the slowdown comes. I think people will try to do as much as they can to keep their home. Many SMEs that I talk to are in a mindset right now to keep as long as they can their employees. We're SMEs country, so small companies, and there was a labor shortage before in many provinces. So people will be very careful by really laying off employees. So that's where I feel that I'm still optimistic. But at the same time, there is some areas when I look at Vancouver and Toronto where we have, a huge debt level leverage there. So there could be some impact in specific areas. But coast to coast to coast, we still feel that if the rates are I think we are at the end of the upside of the rates. So I think if the unemployment rate is still positive, we could go through this process without having 2008 in USA, what we have seen.
We have seen deterioration, though, in the unemployment rate.
Yeah.
It sounds like it's not quite at a point where you're nervous that it could tip things into a stronger decline.
Well, saving is still there. We have many, many people who saved money during the pandemic that listened in the last 6 months about a recession or something like that. So we saw some savings increase in our accounts. So that's where I feel that it could be quite positive. But at the end of the day, I can be with you in March and April with a different situations.
What's immigration doing for your business right now?
Well, it's really positive. We have many newcomers who just wants to do business with Desjardins because they like the fact that we are a co-op, really community-oriented. We're making more than $2 billion per year of net profit. We're really, really profitable. We are growing. and we're a huge player in Canada. But they like the fact that we are totally integrated with the community, still have many branches in many regions in Quebec, in Ontario, wants to do are in an open mindset with many newcomers. We're hiring many new employees. You know, when I became CEOs in 2016, we're around 46,000 in this country. Now we are around 57,000. So many newcomers wants to work with us.
What do you think about the competition landscape and whether there's enough being done to fuel competition in this country, especially, you know, Royal Bank is trying to do get its approval of HSBC Canada?
Well, it's always an interesting question, I think, because the fact is that we have to look at it like safety in our industry compared to innovation and competition. And I think in 2008, you haven't seen nothing in the financial industry in Canada. Why? I think because we have a strong, very well capitalized, and we want to work on the long-term perspective here necessarily. So you don't see so many new players who will come and try to disrupt and take a bit of new innovative risk, and that's where I think that we have to be. What do we want? Do we want really an innovative industry that will take so much risk, or do we want fewer players that are well capitalized, that will well diversify, and we have a stable financial industry in Canada? I feel that Canada decided to be in this field. And when I look at 2008, even the dot-com crisis in 2000, we haven't felt nothing in Canada, nearly.
Does it not come at a price, though, of economic growth? There are increasing data points showing that our productivity, we're starting to slip in terms of rankings, our innovation. There's calls now for some of our Canadian pension funds, which are deploying massive dollars outside of our borders. Hey, stick closer to home, put those dollars to work in our economy.
I agree. I think we still have a huge challenge regarding innovation in many SMEs, technological challenges. How much can we do more productivity in many of these SMEs? But is it only a problem with the financial institution and I don't think so. I think there's many other aspects that we have to go through: regulation, the labor shortage, talent, the uncertainty sometimes. Trying to build projects take long time with municipalities, provincial government, federal government. So there's different aspects that are challenging our SMEs to innovate and to invest. But at the end of the day, should we need more investment from pension fund, from international investors? The answer is yes, because we have so many resources and capacity in this country. And that's what we're doing at Desjardins, trying to be as involved as we can with our pension plan, with our insurance activities, with wealth management, trying to be there for many SMEs and also